All right, welcome to video 3, and in this video we're going to explain to you the third solid income killer, which is debt. Oh my, another topic. I'm just passionate about financial literacy as a whole, but this one here is, I feel like the system is designed to actually put us in debt, right? So let me just kind of give you an example of a couple of things that really brought this level of awareness to me. So I just want to share with you that the system is broken. And just ask yourself this, I was taught to go to school, get a good education, find a job, work there, and then retire from that job so that way I could have a good pension, good Social Security set up, right? And whatever other the benefits was, or 401k, right? So I want to ask you before I go any further on proving my point that I believe the system is backwards or at least broken. How has that worked for you or your parents, that particular strategy, right? Go to school, get a good job, work there for 40 years, you have a pension of 401k and Social Security. Don't worry, I'll wait. It didn't work out that well for me. I know tons of other people it didn't work out for. And what I also find that's interesting about it is that they set us up to go to school to come out to start a living in debt. Normally anywhere from 30 to hundreds of thousands of dollars in debt for going to school for an education. So once again, I'm not dogging education, I'm not dogging jobs, I'm dogging the system that's been passed down and taught to us, which aren't really financial literacy principles. They set us up to actually fail. So let's just talk about debt for a second, because some people, or at least myself, I ended up in debt by choices that was taught to me to go do, right? Not necessarily on bad choices of my own. Now, granted, some of them were some credit card stuff, but the majority of it was stuff that was passed down to me as far as that philosophy. So what I was going to share with you is let's look at the big picture. So if we look at our other two videos that we talked about, so inflation and taxes, let's just look at how that equates to some people being in debt. And so I want to use this as a scenario. So we already talked about inflation. So inflation is going up every year. It's been going up since we all been born every year, right? Cost of living has been going up. So we talked about that being 2 to 3%. But then we talked about in video 2, taxes, right? And most people are getting taxed between 20 and 30% of their check. Now, with that being taken out of the check, 20 to 30%. So let's just give an idea. If you're making $50K a year, for example, and 20% of your income is taken away from taxes, that means technically you've only made or brought home $30,000. Out of the 50 that you got paid gross, you only netted 30 because of taxes. So let me ask you this, where does the other $20,000 come from? Where does it make up? It's not like underneath the pillow. It's not in the backyard. Like, where do you recoup that 20K, right? Most people don't. And a lot of people actually use credit cards to actually now sustain for that income, or payday loans, which is a trap, right? Because now you're in that cycle of, if you had to go get a payday loan, right, now you're in that cycle where you have to pay that payday loan back in 2 weeks, but you got your paycheck that you need to still have. So now it's that balance of robbing Peter to pay Paul. So that's actually a trap, and they're making interest on that. So most people are usually using payday loans or debt. So I'm actually going another route that has nothing to do with the traditional going to school and coming out in debt with no job. That's a whole other conversation. I'm just talking about by just regular living, right? We're trying to make up for the income that was taken from us in taxes, right? Because when we talk about a refund, tax refund, keyword is refund. They're refunding you back your money that they were using in the market to make money, and they're refunding you back because they took too much out of your income in taxes. That's why it's called a tax refund. Another conversation too as well. But so if $20,000 is gone, how do we normally make up for it? Well, with credit cards and payday loans. So now we're using credit cards or payday loans to now pay for things out of money that we already didn't have. So how do we actually pay back that credit card with the same amount of income when we don't really actually have the money to begin with? Hopefully that makes sense. So let me just backtrack. If I'm making $50K in gross, but I get taxed 20% of my income, so I'm only bringing home $30,000 for the year. How do I make up for that extra 20? I'm subsidizing that with credit cards, let's say. But how do I pay that credit card back, that $20,000, I'm just using as this example, how do I pay that back when I only brought in 30? See, you see my point? There's this missing equation there, and most people don't realize that a lot of this stuff is happening from the silent income killers themselves. So inflation, taxes, by not having enough on tax breaks, and now I'm using debt, credit, to help me sustain other things in my life or whatnot. But I really technically don't have the income coming in to pay for it, so it keeps me in debt, and now it's this vicious cycle. And that's what a lot of people just aren't seeing, and a lot of times it's not even your fault. It wasn't my fault. You just don't know, right? That's why I'm super passionate about this topic, is because it's just bringing that level of awareness to people. So hopefully that makes sense. The third silent income killer is debt, okay? Because on top of that, you know, banks make most of their money on the poor. If you think about it, they're not making their money on rich people, right? So for instance, you know, I know when I had this insufficient charge on my card one time, on my debit card, just because I overran it, right? But here was the card, there really was a caveat. I was like, dang, that's crazy. That insufficient charge was a $35 charge by Chase on my card for not having enough funds in my account for the transaction that had went through, right? So I had called them, you know, in this particular instance, they actually did refund it. But here's my point, is banks make billions of dollars off of insufficient fund fees, okay, for people not having enough money in their account for when transactions happen. It's basically your over protection is what that is. So turn that off. If you don't have the money, just don't let it go through. But here's my point is, think about it. Do you ever think rich people or people who have money or a good consistent cash flow never have any money in their bank account? So they never really deal with insufficient funds. It's only people who are probably either live from paycheck to paycheck or just don't, you know, all kind of different reasons, right? I just throw that out there because I used to have that issue. So that's where I was either in paycheck to paycheck or just, you know, have enough funds in there to do what I needed to do and still wanted to see if something would sneak through. And it would, because I had the overdraft protection, but it would come back to bite me because of that fee. Now you got to pay the fee on top of whatever it was you were looking to buy. My point is that that's typically happened with people with low cash flow. Doesn't mean they're broke, but if you're going from paycheck to paycheck, sometimes the cash flow is low in certain areas. But my point of that is billions of dollars are made off insufficient fees. So it's built off of the back of people with low cash flow. Let's put it that way. Because people who are rich and wealthy, they don't have low cash flow. There's always money in their bank account. So it's like if there wasn't people with low cash flow, there wouldn't be billions of dollars made off of insufficient fees. So the third silent income killer is debt, right? So how do we overcome that? It's just having some strategies on how to eliminate and get rid of all your debt. We will actually share that with you in some upcoming videos. But once again, this series was to bring to your level of awareness the 4 silent income killers. So in the next video, I'm going to share with you silent income killer number 4, and that'll wrap up this series. So just to recap for right now, we've talked about inflation, we've talked about taxes, and now we've talked about debt. So in the 4th video, I'm going to share with you the last silent income killer that'll help you have a level of awareness on how to overcome all of these by having a cash flow strategy. So we'll talk to you soon and see you in the next video.